Yeah, Tim Murphy, thank you for joining us today for the Morningstar Fund Manager of the Year Awards. Can you tell us who won the awards tonight and why they won?
So our big winner of the overall award was Harbour Asset Management this year. What we're looking for is excellence across the board in multiple asset classes. Harbour certainly delivered that in spades, both in fixed interest, where they won the category award this year, and also had some strong performance coming out of their equity capabilities. Pleasingly, we also are seeing some good product development come out of there as well. So the launch of a global equity partnership, we think, adds some quality products to what's a scarce space for New Zealand investors.
Look, it's an interesting award because in the past, a lot of the big houses have been the winners. Now we see someone like Harbour, who started as, I'd say, a boutique, have now come through into the big league. What does that say about the New Zealand funds management industry?
I think it's maturing and it's improving, and I think the big pile of assets, driven by KiwiSaver and to a large degree, is really helping small guys build out their capabilities. See someone like Harbour, who started as an equity shop, move into bonds, now do a partnership for global equities, and really build out their offering in a quality way. And so as it's maturing, fund managers are getting to scale, and some of the boutiques are being able to offer a broader range of quality offerings that traditionally might have just been the domain of the large banks and institutions.
So what other trends are you seeing in the New Zealand funds management industry at the moment?
I think KiwiSaver is clearly the key growth driver behind the majority of the industry. The steady flows coming into that now. The market's over $30 billion and growing quite rapidly into KiwiSaver. That's really benefiting the fund managers and is enabling them to reinvest, improve their capabilities, launch new capabilities, and with Harbour being a classic example of that. And I think that's a really good thing for the industry, and it's a really good thing for end investors.
Yeah. And tell us, what are some of the trends you're seeing in global funds flow?
So with the volatility coming back in the market in the second half of last year, we saw flows tail off last year. So where the first half had been quite strong flows across the asset book last year in multiple asset classes, the second half volatility scared people off, and we saw asset flows start to dry up, and that's continued in the first month of this year. So investors have been somewhat spooked a little by the volatility in markets, and we've seen that reflected in flows to date.
Are you seeing that volatility or that investor change of attitude changing in terms of where they're putting their money?
Yeah, I think we've certainly seen in many markets, notably the US, also Australia, probably the two most primary examples of this, increase in passive investing. So big increases going to passive investing, whether that's managed funds, whether that's ETFs. We obviously haven't seen that quite yet in New Zealand because the product set hasn't quite been there, but obviously 2015 did see a number of launches of products on that front. So we're certainly watching that space with a lot of interest to see how the industry engages and takes off or not in the passive area.